Hi everyone, I'm Paul and welcome to episode 3 of my vlog on building a trading system. This video will cover the weekly review from my first 2 weeks of testing the Asian trading range London Open model. I have a weekly review which forms part of my regular routine when I'm trading, and I apply this same discipline to when I'm testing as well. I'll keep sharing elements of this routine over the course of these videos, but if there's something in particular you'd like to know about, make sure you let me know in the comments. In terms of the Asian trading range London Open model, I'm really happy with the progress so far. The setup's looking really promising, and I think it definitely warrants some more back testing and definitely some more forward testing as well. In the process of testing the setup, I've answered some of those questions that I posed myself in episode 1, and I've also uncovered some additional trading opportunities from the setup as well. So there's still a lot of work to be done. I hope you're enjoying this vlog series so far. If you are, it would be great if you could like this video, and if you haven't already, make sure you subscribe to my channel so you don't miss any future updates. Now let's jump into today's video. So today's video is episode 3 of my vlog on building a trading system. So our outline for today's video: first up, I'm going to do a review of week 1 and 2 of trading the system, and then I'll follow that up by going through some of my thoughts on trading the system so far, some potential opportunities and some next steps. And then finally, we'll round out the video with reviewing the trades from the last 2 weeks. So the first 2 weeks of trading the system are complete, and this was live forward testing from the 4th of September to the 18th of September. And you'll recall from episode 2, I did a live trade of one of those particular trades. So all in all, 4 trades were taken, and there was a 100% win rate with a total return of just over 13R, which is pretty fantastic. All of these trades, interestingly, were in week 1. There was no trades in week 2, and I'll go into that a little bit more in one of the following slides. So I was quite happy with how I traded the system. I traded the rule set quite precisely. The only issue I really had, I didn't deviate from trading the model, but I did actually miss one trade opportunity, which would have potentially netted another 2 to 3R, depending on how I would have traded that at the time. So overall, pretty good 2 weeks. There was potentially, 15R on the table for that 2-week period, which is a pretty fantastic result. So some of my thoughts on the system, the potential opportunities and some of the next steps. So you'll remember from episode 1, there was a number of points that I sort of listed that I wanted to get out of the trading system that I was looking to build. And so in terms of this first 2 weeks of trading the system, I was quite happy because from a lifestyle perspective, it was very easy for me to trade. So the Asian trading range London Open works really well for my time zone, and as I've explained in the other videos, that New York Open doesn't really work for me at all. So it was really good from that perspective, and having that really defined rule set for the entry and the trade setup worked really well. I found the system to be really low stress to trade. I was looking for very specific things, and it was just very easy to act on those rules when those parameters were met. It's obviously still really early days with trading the system. I've only traded it for 2 weeks, and as I mentioned in the previous slide, all of the trades were actually in the first week. There were no setups in the second week at all. But based on this small subset, I'm expecting that there'll be, a couple of opportunities each week with potentially a 2 to 3R return each. So one of the initial findings that's sort of starting to stand out, even with this small sample size in trading the system, is the daily bias doesn't really seem to matter that much. It may impact the actual risk return, and there's an example here where we were taking a setup with the daily bias and there was a much greater risk return on the table if we'd chosen to take that. But in general, it didn't matter whether we were trading against or with the daily bias. There were still setups there which were available if we followed the specific rules of the system. One of the other things that came up as well is that taking out the buy side or sell side liquidity from the Asian trading range, as well as the buy side, sell side liquidity from a previous trading range, may actually impact the win rate or the risk return on the actual trade itself. So it's a small sample size, so it might be a little bit too early to tell, but this could be something that could influence position sizing into the future, and so something that I'll continue to track as I go through trading the system. What also was really common is that there was often fair value gaps with multiple imbalances. And so as you'd recall from ICT's teachings, I'd always take the higher or the lower imbalance depending on whether it's a long or a short setup, and I just account for the other fair value gap in terms of my risk management. And I'll go through how I did that in some of the examples in the later part of the video. The other thing I uncovered in the process of the testing is I need to make sure that there's an additional step or check to make sure that the setup falls in either a premium market if it's a short or in a discount market if it's a long. And this is going to help to filter out any low probability or low percentage trades. And so just to wrap up, one of the things I've mentioned a couple of times already is that all of the setups were in the first week of trading and there wasn't anything in the second week. But what I did discover going through the process of doing the testing and the trading for the last 2 weeks is it looks like that there's potentially more opportunities if you also include the Asian trading range as a potential part of the overall setup. And so what this was just simply a liquidity grab in either direction going back to the previous section. So just a similar sort of setup, just looking for a liquidity grab either one way or the other as an additional way to generate some more opportunities using the Asian trading range as well as the London Open. And so what I'm hopeful is that by including the Asian trading range in the spectrum of setup opportunities is that's going to increase the number of potential opportunities in a given week. And so what are the next steps? I'm going to go back to testing the London Open, the Asian trading range. So both of those setups now incongruent. So I'm going to continue both testing live, forward testing, and also doing back testing on both of those potential setups. And finally, people seem to be enjoying the vlog. So that's really great. And I'll obviously keep making more videos. So we'll jump into our charts now. And what I'll do is I'll work my way backwards and I won't look at every single day. I'll just look at days that had something interesting or there was something of note. So there was no trade on the 18th, but the 17th is the first day that we see this occurrence of a potential setup in the Asian trading range. So you can see part of my setup, if you like, is I take the buy side and the sell side liquidity from the Asian trading range as well as the midnight open and extend them into that London Open. Now in this example there's no setup to be had in London, but you can see this run that we have here takes out the buy side liquidity. So it takes out these relative equal highs here, it takes out the buy side liquidity here, and so there's clearly going to be a short setup on this run on liquidity just here. And so this is a good example of a potential setup that we could have on the Asian trading range. Now I'm not going to dive deeper into that in this video. That's something I'm going to do in a separate video, but that's something that occurs a number of times in this 2 weeks. And whilst we're obviously focusing mostly on the London Open as our primary setup, as we've seen, we only had setups just for that first week and we had none in the second week. So if we add the Asian trading range as another potential setup in our arsenal, it just gives us more opportunities in a trading week to extract some value from the market. So definitely something worth investigating and I think deserves a video of its own, so keep a lookout for that one. Now the next day we're going to look at is the 15th of September. Now there was no trade on this particular day either, but this particular day gives a very good example of why paying attention to your premium and discount zones is important to help filter out trades that are unlikely to be successful or setups that just aren't very good quality. So if we zoom in now to our 1 minute chart, you can see we trade above and below the midnight open before we take out this buy side liquidity. Now the first thrust you can see takes it out here. We don't actually break market structure until down here, and the fair value gap is actually formed on this candle just there. So the problem with the location of that particular setup, it's right on the 50% mark of our fib, and ideally we want that fair value gap set up in a premium market, because in this case we're going short, because that's going to give us the biggest opportunity to extract value from the market and also to have a higher probability setup. So you can see if we had taken this trade here at the 50% level, we would have potentially gotten set here and then it would have reversed against us. So that wouldn't have been a great trade. But you can see the market comes back down to the midnight open before taking out this buy side liquidity again, and it obviously takes out this high before it retraces backwards. Now you can see in this example, We then break market structure here. We get a fair value gap formed there. And in this example, this is actually in a premium market. So this is a trade that we would have wanted to take, but you can see the market just never goes back up into that fair value gap. It sort of threatens it a couple of times before drifting away. So there was no actual trade to be had there, but this is a very good example of making sure that you're trading in that premium market or the discount market if you are going long, to make sure that you have a higher probability setup. So the next trade we're going to look at is actually on the 11th of September. Now this was the trade where the bias that we had for the day was bullish and the setup was actually bullish. And so you can see just even by eyeballing this chart, even though we had a risk reward of over 4 times on this trade, the potential for it was significantly higher. So if we run this up, you can see if we'd extracted maximum value from the trade, we would have had almost a 10 times risk reward, which is pretty fantastic. So we didn't actually get that because we were just targeting the midnight open, but you can see by aligning the trade direction with our bias, there's the potential for more from that trade. The other thing which compounded the prospect of a higher return on this trade, and I mentioned this in one of the slides, is that we had our buy side and sell side liquidity marked out. We traded above the midnight open. We come through that, take out the sell side liquidity. So that's our trigger to look for short setups. But in this example, we actually take out the sell side liquidity from a previous session as well. And so that just, compounds the power of this setup, if you like. And now if we zoom into the 1 minute chart, it's a little bit spotty because it's 1 minute candles and it can sometimes get a bit gappy, but you can see we have our double fair value gap. Even though we've got this 3 candle formation, we'd have our stop at the swing low or at the low of that candle. And you can see then on this particular down close candle here, that's where we'd place our limit. So this is one of those examples where we have a fair value gap with 2 imbalances in it. So in this example, we're going long. We take the higher imbalance, but we risk adjust for both imbalances to make sure that we can take the market trading down into the lower imbalance if it goes down there. So in this example, that is what happens. It goes down into this next candle down here before trading higher, and you can see it then trades away. And in this example, I was using the midnight open as my target, but as I mentioned before, there was much more potential from this trade, and so that's something that we'll just need to see more data on. So we only have a small sample size at the moment, but what we'll see with more data is this confluence of factors between bias, multiple grabs at sell side or buy side liquidity is going to create more consistently high returns. That's something the data will tell us, and so we can then use position sizing or more aggressive targeting in these trades in the future when we go live. And so our next trade is from the 8th of September, and again this is a very stock standard setup for the London Open. So we have our buy side liquidity marked here, our sell side liquidity here, our midnight open extended across. You can see we trade above it, we come through the midnight open, we take out the sell side liquidity. You can see we sweep down here, we paint our fair value gap, we break market structure, and again we've got that double imbalance in the fair value gap, so we're taking the higher imbalance in this case. And so we have our limit entry at the low of this candle, and we have the stop at the low of this candle down here. Again, we're targeting just above the midnight open, and that generated a 2 times risk reward on this particular trade. So the second last trade we'll look at is on the 5th of September. So again, this is another short trade, and this is another example of where we've taken out the sell side liquidity from the Asian range as well as the sell side liquidity from a previous range. Now this didn't give the same sort of powerful, confluence of factors to give a much better risk reward like we saw when we had the trade set up in line with our bias. We actually had a bearish bias on this particular trade, but nonetheless it still performs quite well. So if we zoom into our 1 hour chart, you can see the market trades above the midnight open. We come through that sell side liquidity from the Asian trading range. We then take out this sell side liquidity from the previous trading range. You can see we trade higher, but the market then pulls back again. Then this move here that breaks market structure there. And again, we've got our fair value gap with 2 imbalances in it. So in this case, again, we take the higher imbalance as our entry point. So we have our limit at the low of this candle, and then we use the swing low or the low of the bottom candle as our stop. So again, we risk adjust for the other imbalance, expecting that the market may trade down into that. Now in this case, market trades higher before coming back into that imbalance and then trading away. And you can see in this example, we were able to take over 4 times risk reward from that particular setup. And then the last trade we'll be looking at is from the 4th of September. And you can see it's almost a carbon copy from the 5th of September. So you can see we trade above the midnight open. We take out the sell side liquidity from the Asian trading range. We then take out these relative equal lows, sell side liquidity from the previous range, and even then take out this sell side liquidity down here. So you can see we trade right down into that before trading higher. Now, if we zoom in, we've got our fair value gap set up on the 1-minute chart. And once again, we have multiple imbalances on the fair value gap. So we're always taking that top fair value gap or the top imbalance as our entry and risk adjusting for the second one. You can see we paint the swing low here as we take out that sell side liquidity. This move, you can see the displacement, we break market structure there. So we have our limit on the low of that candle. We have our stop at the swing low down here. And you can see targeting just above the midnight open, we get over a 3 times risk reward on that particular trade. So there you go, there's 2 weeks of trading data. We had 4 successful setups, so 100% win rate and over a 13 times risk reward. We did miss one trade just because I wasn't paying good enough attention, and there was easily another 2 to 3 potential return on that trade. So that would have taken the whole 2 weeks as 15 times risk reward, which would have been a really great result, this early in the testing. And there's obviously then those opportunities in the Asian trading range as well, which definitely need investigation, because clearly there's opportunities to be had there, especially when we have, a quiet period and we're just not getting those setups in the London Open. We don't want to be sitting static for too long. We want to be having multiple opportunities for setups in those sessions if possible. So I hope you enjoyed episode 3 of my vlog on building a trading system. As you can see from the video, the process is going really well so far, so I'm going to continue to share my findings with you in these videos. In the upcoming videos, I plan to share some of the results from the back and forward testing from the Asian trading range, as well as some more data on the London Open. So make sure you keep tuning into these videos because there's plenty more to come. So if you enjoyed this video, it would be great if you could like it, because that helps other people to find it. And if you're enjoying this content and you'd like to see more videos like this one, make sure you subscribe to my channel and turn on notifications so that you never miss an update. Thanks for watching, and I hope to see you next time.